The strategy that I'm about to show you has given me 13% in the last 4 days. I've taken 3 trades and all 3 of them have hit take profit. And it's a very simple and easy to follow strategy, all on the 5-minute time frame, so it's easy to learn and easy to replicate on your own accounts. So if you're interested to learn it, make sure to watch to the end, leave a like, subscribe to the channel and join the Discord. But let's get into it. Okay, so the strategy that I'm going to be showing you is an Asian session strategy, which just means that we're going to be looking at the Asian range and looking at the liquidity above and below that range and trading from that effectively. So the Asian session runs from 8 PM to 2 AM New York time. So that's the area you're going to mark up. I will show you an indicator for that when we get into the live charts, but for now, just this is what it looks like. And so when you come to the charts after the Asian session, you're going to be looking for a setup like this if we want to go short. So you want to see price before the Asian range. You can see we're in a downtrend, quite clear. You can see the market structure, it's all bearish, we're coming down. Then we get into the Asian range and the trend stops and we start to range. You can see the market structure in the Asian range will normally be quite flat. Sometimes it will try and create liquidity. You're going to have equal lows, equal highs. And in fact, in this strategy, what you might see, if you're going short, if the market structure before the range is bearish, you might see a pullback for 2 reasons. The first one just being the corrective price action. After a big move down, you're going to move up a bit as a pullback, but it's also going to trap retail traders that don't know about the Asian session to think that we're going long and the market structure turned bullish, and they might try and enter longs and then they'll get trapped and the big institutions will go short. But this is the setup you're looking for. And if you don't know about Asian session liquidity, basically below the low of the Asian session range there is sell side liquidity, and above the range there is buy side liquidity, which are basically just fancy words for the fact that there's orders resting below and above these points and there's liquidity there. That's the main thing you need to know. There's liquidity below the Asian range and liquidity above the Asian range. And so what you're going to do when you come to the charts after the Asian session is you're going to look back, and in this case you're going to look for some supply zones that are fresh. So you could have a supply zone up here, draw it out with your box tool, and what you're going to look for is just price to come into that zone and then take off. So in this bearish setup scenario, you will be looking for price to, it doesn't really matter how it comes into the zone, you just want it to come into the zone, and then you're going to place your sell limit on the zone, and effectively it won't go straight down, but you'll do something like this, and you're looking to target the Asian low. In this case, obviously the Asian high if you're going bullish setup, but in this case you're going to be taking profit at the Asian low. So you just place your sell limit, place your stop loss above the high of the order block, and then target the Asian low. And in this textbook setup, just works out as a 4.4% R, which is probably going to be about average. You're not looking for crazy risk reward, but you're not looking for one-to-ones. And when we get into the chart, you're going to see just how powerful this strategy really is, because over just the last few days, as I said, it's given really nice setups, all on the 5-minute. And in this case, I'm just using Euro USD. It's a good pair to practice on. It's got a lot of trading volume, so a lot of liquidity, which does make it ideal for this strategy. Something that is key to note is that the supply zone doesn't have to be at the top. You know, it could be down here. And in that case, you're just going to enter from the point where it touches there, take profit again, still at the Asian low, and you might get tapped in and then some liquidity taken out, and it could look something like this with a lower risk reward, but these probably happen more often from what I've seen. You're just going to need to learn which supply zones have the highest probability of playing out. You can use rules for that. You can look for inducement, you can look for imbalance, and you can look for if the order block took out some liquidity. Wherever you want, it's up to you. But the base level strategy is just look for the supply zone or demand zone in a bullish setup, and then sell limit and go short. So if you want to take a picture of the textbook bearish setup, go for it now, and then the bullish setup would look something like this. Exactly the same, but just the other way around. So if you want to take a picture of that as well, go for it now, and we will get into the live charts examples now. Okay, so the first trade that I wanted to take you through is here on Euro USD on the 5-minute on the 9th of May. So this is going to be the chart you're looking at after the Asian session has just ended, and I'm going to let you now, if I zoom out, you can look for your bias. You can see, tell me what you think your bias for this day would be, but you can see we're in a downtrend, market's moving down, so my bias is going to be bearish. Even if you're bullish, if you're looking for demand zones below this area, there isn't any, so you couldn't trade from that anyway, but the bias is bearish. So if you just look at this recent price action and market structure, look at any zones that you might think could be valid supply zones, and then I'll tell you my thoughts. So the 2 zones I see are this zone here and this zone here. And the reason that these are both valid zones for me is because, as you can see, they're the last bit of buying before a big push down. Up here, you've got loads of bearish candles, you've got a lot of displacement, a lot of imbalance being created. And it was clear that somewhere in this area, a lot of sell orders were placed. Same here, you've got a bit of consolidation, and then this last bit of buying before a big push down, breaking structure, both of them break structure, and leave behind a lot of imbalance. Now you might ask which one you want to trade from, and you can place limits on both if you want. You can just go for the most extreme if you want. But for me, they're both valid, and so I would be entering from both of them. If the first one fails, you can look to get an entry on the second one. It's quite a big zone, so you might try and wait for a change of character in 1 minute maybe. But just to keep things simple, sell limit at the low, stops at the high, and then target your target point. So for this trade, what I did first was I put my sell limit up here, stop loss above the high, and I was just simply targeting the Asian low. So this was a nice 5.6% trade, and as you will see, it played out very nicely. Tapping us in, and then almost taking us out, but as you can see, once we're in that zone, a lot more selling, which just kind of validates this whole trading strategy. The fact that when it taps into our zone, we get a big sell-off, shows that we were right in thinking that there's a lot of orders here, because when it comes back in, then we continue down. And you could have targeted some other liquidity. This area is just spreads taking out stuff, so you could target some liquidity below there, any of this liquidity, this point. If you targeted these lows, you're going to be going for a 1 to 12 risk reward. It didn't play out here. Sometimes it would, but that's kind of the downside of going for higher risk rewards. Almost tapped us, but then took us out. So that was the first trade. And then the next day I didn't take a trade, but I will just show you that as to why. So for this next trading day on the 10th of May going into the 11th, you can see that we've had kind of a change to now likely bullish structure, but I'm not looking to go long because of how price has been coming down throughout the previous week or so. I don't want to try and catch the first move long. If we've got another day going long, then in the next day I might look to go long, but for now I wouldn't go long. But if you were, you could mark up some of these zones, something like this, these two demand zones, but they both got taken out if you did trade it, and that's why having a daily bias can be quite helpful. But it's not necessary. If you just want to trade either direction, then you can. Sometimes you'll lose, you'll have a low win rate, but it is a bit more simple and easy to follow. Okay, so then on to the next trade that I took on the 11th of May going into the 12th. If we look back a bit, you can see, yes, we had a bit of bullish structure, but we continue now with our downtrend. This day's been very bearish. Had a pullback before, a lot more selling, pullback, more selling, a little bit of corrective market structure, but we're still bearish. And so if I look here, you can tell me which any supply zones that you would be looking for. And so something you might notice is that this supply zone back here looks like it hasn't been touched, and while that is true, you can see that the last bit of buying before the selling doesn't just include this bullish candle, but also from this wick, all the buying up there could be manipulation before the push down. And so while this 5-minute order block hasn't been mitigated, on the 10-minute or something, it probably has been. But you could still look for that if you wanted to. But the one that I was looking at this day was this one here, so hopefully you saw that as well. Just this zone here. Again, push up, liquidity grab, push down, and then lots of bearish candles, a lot of imbalance, showing that we're bearish and that there was a lot of sell orders placed in this area. So again, you can just place your limits. That's what I did on this zone. Stop us at the high, and then take profit at the Asian low. So this was a smaller risk reward trade, only a 2.4% win, but it does mean that on something like this you have a higher probability of playing out in general, and so we can let it play out and see what happened. We got tapped in, and then again shot down. So it's something you see a lot. Once you get tapped into the trade, it does just shoot down in your direction a lot of the time, not all the time obviously, and sometimes you get it wrong. Sometimes there will be losses. In fact, I'm going to go into a loss next. But when stuff like this happens, you gain confidence that this strategy does work. And so in this case, obviously, targeting the Asian low is going to be a safe bet. If there's some liquidity, because we're in a bearish trend, it's likely that this low is going to get taken. And so that is the valid place to target. And in this case, that would be a 1 to 3.7 trade. So still not crazy risk rewards, but you probably don't want crazy risk rewards because it will really give you a low win rate. Okay, and then on to the final trade here on the 14th of May going into the 15th of May. This was the last trade that I wanted to show you, and while I was recording the intro for this video, this trade was playing out very nicely, and so I kind of presumed that wrongly it was going to hit take profit, and so I didn't actually end up making 13% from these trades. One of them lost, and so I only ended up making about 6%, but that's still very nice from 3 trades if you're risking 1% per trade. But I think it's probably better to show you that some trades do lose, and you need to stay humble because the market will humble you if you don't. But just looking at this trade then, as you can see again, bearish bias, price has been pushing down, and any supply zones that you want to mark up. This one wasn't an extreme supply zone, it's just in the middle, but it's still a bit of buying before big push down, so I marked that up, and I was waiting for price to tap into there, and then hopefully create some new lows. Because we've got a range here, there's going to be liquidity on both sides of the range, and I was expecting this low to get taken, as well as just the Asian low. So I place my limits there, stop loss above the high, and take profit at the Asian low. So we let that play out. You can see price tapped in, shot down, but then didn't reach our Asian low and took up, eventually hitting the stop loss. And while you shouldn't always look into why your trades lose, because sometimes they just will lose, sometimes there are reasons. And if we go to the 4-hour time frame, you can see that there was actually a demand zone that price was in, and price could have been respecting this and then turning bullish. So that's something you can look at higher time frames, but it's not always necessary, and trading on loads of different time frames can just create confusion, and it can affect your ability to see the markets clearly. So to keep things simple, I'd probably suggest avoiding that. But other than that, that's going to be all for this video. Just make sure you realize some trades will lose. It's about taking the same trade set up over and over again and being able to make money over time with it. But yeah, hopefully you learned something from this video, and make sure to leave a like, subscribe to the channel, and join the Discord. Thanks for watching, and I'll see you in the next one.